AEGON, be ready for life.
By setting up a company pension, your employer has recognised the importance of helping you plan for your retirement. In this short video, Vanessa and I aim to give you more information about how a pension with AEGON works and how joining it can allow you to take control of your retirement savings, helping you to be financially prepared for your future. We've broken this video down into chapters so you can find the information you need easily. You can move between the chapters by using the directional buttons on your screen. At certain points, we will also indicate when you can find further information by rolling your mouse over the video and clicking on the headings shown.
By not joining, you could be missing out on money you're entitled to. And when you see the effect even a short delay can have on what you'll get when you retire, you'll thank yourself for not putting it off. Imagine you pay £100 into your plan each month. Just look at how much more you might get as a retirement fund if you start saving sooner rather than later. Remember, these figures are just examples and aren't guaranteed. So now's the time to take action and start saving into a pension plan.
People give all kinds of reasons for not joining their company pension scheme. I can't afford it. I'll start later. I live off the proceeds from my property. I won't be with my employer for long. I live off the state pension. Do any of these sound familiar? Use our calculators on your pension scheme website to see what you may get when you retire and what things might cost you in the future.
Take a look at what the current state pension is. Some of us may be eligible for an additional state pension called the State Second Pension, previously called the State Earnings Related Pension Scheme. Like the state pension, the amount you get depends on your earnings and your national insurance record throughout your working life. As you can see, the state pension isn't much, and the age at which you can claim is rising. So you may not be able to do all the things you'd like to when you retire if you rely on this alone. By combining your state pension with a personal pension, you can achieve a better standard of living when you retire.
Did you know a pension plan is one of the most tax-efficient ways to save for your retirement because the government tops up your personal contributions. For example, every £100 you save into your plan will be topped up to £125 using tax relief by the government. This means that by not contributing to a pension, you're missing out on an extra 20% being added. If you're a higher rate or additional rate taxpayer, you may be able to claim extra tax relief. The amount of tax relief you'll get depends on your financial circumstances and how much you earn. To find out more about the specific tax charges that may apply to you, we recommend you get professional financial advice. So with the help you'll get from your employer and the tax relief you'll get from the government, it really does pay to join. Because of these generous tax benefits, there are limits on how much you can save into your plan each year. Roll over this video now to discover more about these limits.
So how much will it cost you to join your scheme? Well, it's probably not as much as you might think. Let's say you earn £17,000 a year and you need to contribute 3% of your salary to your plan. Well, this will cost you just £34 a month. But remember, you'll actually get £42.50 paid into your plan because the government tops it up. And what if you were paying 5%? Well, it still only costs around £56, which is topped up to £70.83. And remember, If your employer is contributing on your behalf, it'll be in addition to your basic salary. So by not joining, you could be missing out on money you're entitled to. Have a look. Let's say your employer matches your 5% contribution. They'll actually pay £70 into your plan because they'll be matching your gross contribution. That's your 5% plus what you get from the government. This means each month you'll get £141 paid into your plan, and it'll still only cost you £56 a month.
In this example, by not contributing 5% of your pensionable salary a month, you would miss out on almost an additional £85 being added to your plan. Remember, these figures are just examples and aren't guaranteed. Why not try out our pension calculator on your pension scheme website to see how much you may get when you retire? It will show you what you could expect to get when you retire based on your contributions. Your contribution structure is the amount you and your employer agree to pay into your plan each month, usually as a percentage of your salary. You'll get more information about this before you join. You can make either regular or single contributions to your plan.
Regular contributions are the ones you agree to make into your plan every month. You can also make single contributions at any time within the set limits. All you need to do is contact AEGON or let your employer know you want to make a single contribution. And because your plan belongs to you, you can choose how much you'd like to save. But remember, reducing your contributions will reduce your retirement fund.
To find out more about the limits on contributing to your plan, scroll over the screen now. Depending on how your scheme is set up, your employer may also make a contribution to your pension plan. See your joining information for more details. As well as your personal contributions and your employer's contributions, scroll over the screen to find out other ways to add to your pension.
When you invest in a pension plan, your money goes into an investment fund or funds on your behalf to build a pot of money for your retirement. Your employer may have chosen a fund for your scheme in which you can invest, or they may have left that choice to you. Your plan information will tell you the investment options available. You'll have the flexibility to switch the fund or funds you've invested in at any time. But if you're not used to investing, don't worry. By learning more about how it works, you can feel more confident about choosing the funds that are right for you. We all have different investment requirements, which could be influenced by our age, expectations, and attitude to risk. To help you decide where to invest your money, it's often helpful to ask yourself, how much do I want my investment to grow by? How many years do I have before I want to retire? How much risk am I prepared to take? What level of involvement do I want to have? All funds carry the risk of losing money, some more than others. That's why AEGON offers a wide range of investment funds, from minimal to high risk, so there's something for everyone.
The funds cover a range of different investment styles, risks and sectors. To help you, we've broken our funds down into different categories. The categories include risk, where the investment funds are broken down from minimal to higher risk groups depending on the asset classes they invest in and the proportions those asset classes account for. Asset classes, where the investment funds are split on the basis of what they're investing in. For example, they might only invest in shares or equities. Lifestyle investment funds, funds that move into investments that aim to protect the amount of pension you can buy as you near your target retirement year. Self-select, investment funds where you can build your own portfolio and take responsibility for the ongoing decisions about where your money is invested. To find out more, scroll over the screen now and click on each category. Depending on the arrangement your employer has set up, there may be some charges applied to your plan. These are for managing your plan and investments. The most common charge is the annual management charge, also known as the AMC. This is a charge for administering your plan and it comes straight out of your fund. You'll find a note of the charges that apply to you in your personal illustration document when you apply. To find out what the main charges you may come across and what they mean, scroll over the screen now.
Joining is simple and could make a big difference later when you come to retire.
All you need to do is read through the information you receive, and complete the application form.
When you join, you'll get your own pension plan in your name. This means you'll have the flexibility to choose how much you want to save and where you'd like to invest it.
If you need more information before deciding to join, you should think about getting professional financial advice. You also need to have something in place to make sure your money goes to the right people if you're to die before you start to use your retirement savings. It's not a topic any of us like to think about, but when you're planning for your future, it is important, so you should give AEGON guidance on where you want your money to go. In your pack, you'll find a death benefit nomination form which you should complete and return, or you can download one from their website.
Alternatively, you can set up a trust for your benefits. You should get professional financial advice if you're considering this. Once you've joined, you'll have a bit of time if you want to change your mind. When you're a member, you'll get a yearly statement which shows the current value of your plan and what you might get when you retire, so you can keep track of how your plan is doing.
As a plan holder, you'll also be able to access up-to-the-minute information about your plan online using our online services. This secure site allows you to view details about your plan, such as fund information and a full transaction list. For example, all the contributions paid in, switches and plan charges. You'll also be able to switch your funds and view the estimated pension income you could receive when you retire. To find out more, scroll over the screen now. Once you've joined your plan, you should review it regularly. There are many reasons to review your pension plan. These can include your fund value. Is your current or estimated fund on track to provide you the income you're aiming for? Contribution levels. A change of personal situation may mean that you want to review your contribution levels. Investment strategy. Are your investments performing as you expect them to? Do you have any other existing pensions? Joining a new pension scheme is a good time to review any other existing pension benefits you may already have. You can also transfer existing funds from other pension arrangements you might have. And because the plan is yours, you'll be able to keep the money you've built up, including all the contributions your employer has made, even if your situation changes. Or you may be able to transfer them to another registered pension scheme. Transferring can be a complex decision. You should get professional financial advice if you need more information. Scroll over the screen now to find out where you can get financial advice. So what can you look forward to when you retire? We'll write to you 4 months before you're due to retire with a list of your options. But you'll have quite a few options, so it's important you choose the right one.
You may be able to take up to 25% of your pension fund as tax-free cash plus an income for life. Choose how often your pension is paid, either monthly, quarterly or yearly. Or choose to have a pension paid to your husband, wife or civil partner if you die.
So if you're planning an earlier retirement, a pension plan might help you do this. As with all investments, you should remember that benefits aren't guaranteed and the value of any investments may go down as well as up. We've briefly explained some of your options here. Scroll over the screen now to find out more about your options. If you have any more questions, you can also look at the key features information in your joining pack.
You may like to know why your employer has chosen AEGON as your pension provider.
AEGON is one of the world's largest life insurance and pensions companies with customers worldwide.
But although AEGON is a global business, it's focused on the needs of its local markets.
Its aim is to help people plan ahead to build better financial futures. And in the UK, it's been helping people with their finances for over 175 years.
It's one of the leading corporate pension providers, and its financial strength and award-winning expertise mean you can be confident your future is in safe hands. If you'd like to know more about AEGON, just visit the website www.aegon.co.uk. Don't worry if you miss that address. You'll get all the website and contact details you need in your information packs.
We hope you've found this information useful for helping you think about your financial future. If you have any questions about your scheme or need financial advice, there are a number of places for you to look for help. you could go to the questions and answers or useful documents sections of your pension scheme website. If you can't find the answer you're looking for there, you should visit the useful contact section to find out who you should speak to. Please also remember to read any other written material you get from your employer.
AEGON, be ready for life.